Welcome to my YouTube channel, The Executive Outcomes. My name is Michael Monsaliova. I'm going to make a presentation relating to taxation of employment income, part 1. For this presentation, we are going to cover basically three broad areas. One, the emoluments, employment and office. 2, employment compared with self-employment. And thirdly, basis of assessment of employment. We start by looking at some important definitions of terms. One, we're looking at employment. Employment is that which involves a contract of service, whereas self-employment involves a contract for service. We also look at what emoluments entail. Emoluments refer to all payments that an individual receives by virtue of holding an office or employment. Emoluments in this case caters for all salaries, wages, bonuses, commissions, overtime pay, gratuities, benefits and advantages, allowances, and all payments which an individual receives as a result of holding or being an employee or holding an office. So that's what we can say about emoluments. When you look at employment, it is said to exist where there is a legal relationship of master and servant. This may be evidenced by a contract or it may be implied. What of an office? An office can be described as a position which exists independent of the person presently occupying it, and it must be capable of being declared vacant. Okay, so those are very important terms that we have to be familiar with as we proceed looking at this taxation of employment income. Now let's compare employment with self-employment. For tax purposes, it's important to distinguish between employment and self-employment. The reason is that when it comes to self-employment, the income gained, is taken to be business revenue, and the tax rules happen to be more generous on business income, and you find that some people might be more inclined to claim they are self-employed because of that very reason. So let's look at what are the issues that surround the employment and self-employment. I've started by saying the distinction between employment, which is receipts, which involves receipts that are taxable earnings, and self-employment, which involve receipts that are treated as trading income, is a very fine one. Employment involves a contract of service, as we have learned, whereas self-employment involves a contract for service. Now, for the taxpayers, as I already emphasized, preference is made for self-employment, generally because the rules, as I've mentioned, on deductions for expenses, which lowers the taxable income or the tax burden of the taxpayer, are more generous compared to where you have employment income being taxed, as the rules are notoriously difficult to secure deductibility on expenses. So let's continue. We look at, first of all, factors to consider in establishing whether one is employed or self-employed. A number of areas will be looked at, and please carefully listen to these and understand them, because the tax examination questions will require that you fully understand these particular distinction points. The first one I can look at is degree of control exercised over the person doing the work. Okay. If you want to know whether someone is self-employed or employed or an employee, look at a degree of control exercised over the person doing the work. If you notice that the high level of degree, for instance, for an employee, this person needs to be closely supervised and will be dictated to according to the terms of employment. You'll be told, for instance, when to report and when to stop work. So, whereas for self-employed, that's not normally the case. Once the contract is awarded, the contractee will know one time to report and what time to knock off. No one will say you have knocked off much earlier than that you are supposed to. Okay, so there is a degree of control consideration here that helps us distinguish between employed and self-employed. The other aspect that needs to be looked at is whether one who is doing work is capable of accepting further work, whether he must accept further work. When you look at an employee in a work environment, you find that this employee, the supervisor can come around and again assign this person further work, okay? And he has to comply because they are an employee. Remember, the relationship is that of master-servant relationship. Whereas for the self-employed, he can only accept work that is within the terms of his contract. So he cannot do more than what the contract says. Okay, basically, that's what we look at. Okay, again, the next point we need to consider is whether the other party must provide further work. Okay, similar to the point I've just belabored, you find that the master can provide further work to an employee. For the self-employed, again, this has to be within the contractual agreement provisions. We also look at what of the aspect of tools and equipment. Okay, in this particular case, normally when an employee is supposed to use tools and equipment, the employer provides these tools and equipment. But for self-employed, if he's given a task, it is an expectation, or it is expected of him or her to bring his own equipment. He will bring his own equipment because he's hired. So that will be a signal that this person is self-employed. Further, we find out whether he has his own helpers. Okay, for an employee, once you have been given the employment, you are expected to do the task or work yourself. But for a self-employed, once a contract is won, this person can go out and employ other people to do the task. What of payment and financial risk? What can we say about this? Okay. On this one, I've said that the degree of financial risk he takes is a paramount importance. For a self-employed, you find that if anything goes wrong, he might not get financial or earnings. It means that if he doesn't do work very well, you might find that this person loses on income, okay, because that his incomes are dependent on whether his business is doing fine or not doing well. For an employee, as long as the contract is in force, contract of service, what will happen is that whether the business is not doing fine or the business fails to pay this employee for a particular period, that amount probably will be accrued and this person will be paid in arrears, which is not the case with the self-employed. If there is no work, there is no income. But for an employee, you find that even if the business has got challenges in raising income, as long as this person is employed, this income for this employee will still be paid in form of arrears. Other factors to consider are like a degree of responsibility for investment and management. Okay, an employee is given a task to carry out, and he doesn't care or doesn't really directly get considered on what type of investment the business or the entity is working for is supposed to go into, and is not responsible for the management of that particular business. Whereas for a self-employed, he has to consider where to invest, and he is also responsible for the management, okay, team, because he knows that if this is not well decided, if there is a wrong decision in investment or wrong decision in engaging the management, then he stands to lose. So you find that he takes that responsibility as a self-employed relating to investment and management he has. Furthermore, we look at whether he can profit from sound management. Okay, for a self-employed person, definitely when there is sound management, this person, the business will grow. Okay, the business will grow. Particularly for employees, with sound management, definitely you would notice that whether there is sound management or no sound management, the income that this person is going to get is the same, because the income is fixed. But for a self-employed person, when there is sound management, his profit grows and his investment grows, and therefore he benefits from sound management. Control, whether he can control when he chooses, whether he can work when he chooses. For an employee, that is not available to an employee, because he has to work according to the contractual agreement. If he's told to report at 8 hours, he has to report at 8 hours to 17 hours every day. For a self-employed, you can be awarded a contract. You don't need to be particular about when to start work. As long as you are going to carry out the task within the agreed time as per contractual terms, it doesn't really require the self-employed to start as early as maybe, for instance, 8 hours every day and knock off at 17 hours every day. A self-employed can come at 10 hours, for instance, and work all the way to 20 hours. Okay, so that's how it is done. What of the type of contract? Okay, the wording of the contract can also indicate whether this person is employed or self-employed. As I've said, for an employee, the contract will state that this is the contract of service. Okay, whereas for the self-employed, it will be contract for service. Work performance. An employee must perform the duties assigned to themselves, while self-employed may hire other people. Okay, that is how it is done. You can be a contractor, you employ other people to come and do the bricklaying, for instance, or the works, whatever the case may be. You can be a contractor to repair a car, you go and hire mechanics to do your work. But if you are an employee, you are employed as an accountant, you yourself is supposed to do the work. You cannot stay away and bring other people to come work for you as an accountant. Part of place of work. For employees, normally the place of work is specified. Okay, that has been the case all along, although times now have changed. There is where employees are asked to work at home as long as they are able to communicate through the advancement of telecommunication and the internet facilities, or e-work as some people call it. But in the olden days, when the recent past, when somebody is employed, you are expected to come over and work at a particular designated place as your office. For a self-employed, that is not necessarily the case, because a self-employed can choose where the job or the task will be carried out, not necessarily that specified by the person who has contracted him or her. For instance, if you are going to repair a car, okay, you don't need to go to the the person who has engaged you at the premises, or the person who has engaged you. You can actually work anywhere. Maybe the vehicle was broken down somewhere, you follow it there. Okay, that's the case. So, or you might take the task and work on that task in a place where you are comfortable. Okay, maybe at your place of work. Okay, so that is self-employed. We also have the aspect to consider that relates to correction of work. Employees will normally rectify any faulty work during the normal working hours, and those hours are paid for. While for the self-employed, the rectification of faulty works is outside the contract time, and those times for repeat jobs are not paid for. Okay. We also have engagement and dismissal to consider. An employer will take on and dismiss employees. A self-employed person, the contract will specify when the work begins and when it ends. For insurance, when we come to insurance, employers will normally provide insurance cover for actions of their employees. Okay, they have a vicarious liability, while the self-employed persons have to provide for their own insurance. The person who is engaging them has no vicarious liability. Then we also have exclusivity. In most of the employment contracts, there can be express clauses included about exclusivity, where employees normally work for one employer. They are barred from working for other employers. This is a common practice because some of the type of businesses, they will be if an employer is working for a multiple number of employers, they risk certain business secrets to be spread, and that is risky for a business. So normally some employers might put a clause relating to exclusivity. But for the self-employed, normally you have this person is working for himself, so he has to raise revenue by working for several clients. So there cannot be exclusivity clauses in this particular, in most cases. Now, there are a number of relevant cases that can assist us or underpin what we have actually looked at. For instance, we look at the case of Edward versus Clinch of 1981. Here, the fact of the case was that a civil engineer acted occasionally as an inspector on temporal and ad hoc appointments. The holding was that there was no ongoing office which could be vacated by one person and held by another, so the fees received were from self-employment, not employment. Okay, so you can look at that. You can research on that one for more details. Another case is Hale versus Lorima of 1994. A vision mixer was engaged under a series of short-term contracts. It was held that the vision mixer was self-employed, and not because of any one detail of the case, but because the overall picture was one of self-employment. Again, look at these particular cases out of interest, find out the other details. We also have the third case, which has to do with Carmichael and Anna versus National Power PLC of 1999. Here, individuals engaged as visitor guides on a casual as required basis were not employees. An exchange of correspondence between the company was taken between the company and the individuals, not a contract of employment, as there was no provision as to the frequency of the work, and there was flexibility to accept work or turn it down as it arose. Sickness, holiday, pension arrangements did not apply, and neither did grievances and disciplinary procedures. So that is what you can actually look at in terms of some causes which have given us precedence to decide on whether somebody is employed or not employed. We move further to look at the basis of assessment for employment income, talking about emoluments. Now, the term emolument includes all payments made to an employee or office holder, whether before commencement of employment or upon cessation of employment. So that's what the tax law guides us. The term employee also means anyone who receives employment income, either, or that is both employee and directors. Okay, so the emphasis is on employee and directors. Why? Because when it comes to what is deemed when is emolument received, the conditionalities are a bit different. Okay, so conditionalities are a bit different. Okay, so that we're going to look at that. Again, be notified that general earnings are an employee's earnings plus cash equivalent of any taxable non-monetary benefits. So that's what we can call as earnings, or to earnings include. Earnings means salary, wages or fee, any gratuity, other profit or incidental benefit obtained by an employee, if it is money or money's worth, something of direct monetary value or convertible into direct monetary value, or anything else which constitutes a reward of employment. Okay, so that's what is taken to be earnings. So in this particular regard, you might find that sometimes an employee can be given a cash voucher or a non-cash voucher. Okay, so those will be taken to be earnings. So we come to the point where we will have to decide when are earnings received. Basically, the basis of assessment of emolument is the actual receipts basis. When we say actual receipts basis, it means that emoluments are chargeable to income tax in the tax year when they are received by an employee. However, due to differences between the time when the payments are actually made and when the payments become due, the emoluments for employee are deemed to have been received on the area of 1, the time when the payment is actually made, and the time when the employee becomes entitled to emoluments. Okay, so these are deciding factors. Okay, so if you have a situation where the management has decided to pay an employee, say in September, then the payment is actually made, say, in October. In this regard, the emoluments will be deemed to have been received in September, when because that is the time when the employee becomes entitled. Is the area of the two. Let's look at when it involves directors. Directors' emoluments are deemed to have been received on the areas of the following. So there are expanded situations. 1, the time when payment is actually made. 2, the time when the employee becomes entitled to emoluments. 3, the time when the amount payable is decided. 4, the time when the amount payable is credited to the company's accounting records. 5, the end of the company's accounting period. So the area of end of that will be deemed to be the time when the director's emoluments have been received. So that makes us come to an end of employment income part 1, taxation of employment income part 1. In part 2, we are going to look at taxable and exempt emoluments. We shall also look at taxation of allowable expenses, and also looking at the operation of pay-as-you-earn system. So we are going to look at taxation of payment made on termination of employment as well. So these are the things that you look forward to in part 2 of taxation of employment income. So please don't forget to subscribe to my channel, and I look forward to seeing you in or being with you in the next presentation relating to taxation of employment income. Thank you for listening.